Is the market shifting? Where do we go from here? Hey everyone, and welcome back to this week's episode of the Vancouver Life Real Estate Group and EXP Realty. I'm joined here with my co-host Dan Wertel, and we are talking today specifically about a noticeable shift in the marketplace. And Dan, feel free to chime in at any point here, but does it not just feel like we went through a spring market in January and February? I mean, certainly the data would suggest we did.
It certainly did. I mean, come on, let's talk about just the price surge alone. The all-time highest amount of price percentage increase just happened last month. And that was, of course, a result of the increased levels of activity. Again, coming off a baseline that was quite low based on super low inventory. But yeah, when you're out on the streets in a February and you are seeing open houses lined up down the street, when you're seeing double-digit multiple offers still, then yeah, it felt like a spring market through late January and definitely February.
Yeah, because it certainly feels like a bunch of the sellers maybe didn't get that notice. I mean, we still dealt with, extremely tight inventory, and it's only now that we're starting to see a little bit more inventory build, and that's low and hold, I think, to the fact that we're seeing a climate, if you will, change. It's not just interest rates; it's, I think, it's a combination of effects. But, you know, when you when you look at the fact that March and April are typically bigger listing months, even May is a bigger listing month, and noting that we're only 11 days into March, and we just saw, like a 6.4 or 6.2% increase, I believe, in price over the last 2 months alone. I don't know if we're going to maintain that pace. It seems insane, with now having an interest rate hike. We've now got some other big factors at play here. Inflation, near 30-year highs. Gas prices are up 30 cents a liter. Grocery prices have gone bananas, and there's a pun intended there. And now we've got oil hovering at $130 a barrel. This is markedly different than 2 years ago. And so the forecast theoretically should be changed with everyone getting squeezed in different corners here.
Yeah, I think it's happening from all angles, like you said. It is, people are getting pinched. We've got fuel and food at a 30-year high right now. Yeah, anyone who's gone or driven lately has obviously seen the price at the pump, and that's a very tangible sort of index to reference. And obviously, you go grocery shopping, it feels higher. You buy a house, it's higher. I mean, you'd be hard pressed to find something that's gone down in price in the last, couple of years, let alone couple of weeks here. And the dynamics really changed a lot. And I think this is largely induced by the Black Swan event being a war. So yes, things were kind of coming to a head already. We've got inflation ripping high. I mean, the US just reported a 7.9% print yesterday. I mean, that's a 40-year high for the States. And Canada's is coming next, and it's going to be higher than it was last month. We've also got that interest rate hike. That just happened, and that was the first one since 2018. So a lot of people who maybe weren't in the housing market before and now are, that's the first time they've ever even heard of or paid attention or had the time to want to understand what a rate hike actually means to real estate and to their mortgage payments. So there's a lot of extraneous circumstances that are shifting and shifting quick. And I think the marketplace is shifting quick with those.
I mean, I released a social media post not too long ago, just mentioning the fact that I was noticing a sentiment change, how, even just 2 weeks ago, you tried to make a phone call to get in and see a place, and you would, you couldn't get in. They just literally are double or triple booking you to get you through. I mean, our last Mount Pleasant listing had 47 showings in 5 days. But now we're doing offers on properties on offer day, and sometimes no one's showing up. Like, it's completely different, and sellers are kind of gobsmacked about what's kind of happened. But I think the issue for sellers might get compounded even further before it gets a little bit better. And the reason I say that is, we're in that typical listing month where, or spring market. This is the start of the spring market here, historically. But the last 2.5 years have been anything but historical in terms of a cycle. So it's interesting to see where we're at now. And if sellers continue to realize that maybe the environment is changing, there could be a bit more of a rush for them to get to the marketplace to try and lock in their sale, their equity, their price growth. But if they do that, that'll be more and more property hitting the market. And with now buyers having less purchasing power, they're going to get spread out by the inventory that comes on. And we could see, at least a little bit of pullback in terms of the feverish nature that we've seen over the last 2 years.
And I think we're definitely starting to feel some examples of this. So I think we should give a couple sort of boots on the ground here, examples of sort of what we're talking about, right? Ryan and I are very active in this Vancouver real estate market, and you really do get a sentiment just by not only boots on the ground, but of course, when you're talking to your colleagues every day. Excuse me. So a couple examples. Yes, literally as soon or as recent rather as, let's say, 3 weeks ago, a detached home could easily fetch 10 to 20 offers. Let's call it in that $1.5 to $2 million range list price. Today, we're hearing one offer, two offers kind of thing.
Yeah.
That's a radical reduction. Yeah. And it's happening quick. Again, we're talking literally 3 weeks ago. And the same sentiment could be echoed for condos. Maybe not 10 to 20 offers, but those condos that 3 weeks ago would get 5 or 6 are now getting 1, 2, sometimes none. Right? We mentioned a couple, or I think it was last week, how got a great condo under contract, no competing offers. Right now, I'm negotiating something in the West End. Great condo, no competing offers. Like, we're negotiating. We are below asking price. We are full subjects. I couldn't even say that word 3 weeks ago unless it had the word free right after it. And it's fascinating to kind of be in this position. And again, so quickly. And then talking to realtors, it's happening across the GVRD and beyond.
Yeah. Well, I mean, Dan and I are, with the fact that we're with EXP, we have, partners that are across the nation and into the States as well. So, we're hearing stories through those channels that the market is shifting there as well. So it's not just localized. It's not just in Canada. It's not just in BC or in Vancouver. There, like Dan said, there's this massive sort of black swan event that's happened. And now everybody's focus is on, arguably far more important things. Right. So, so where do we go from here? What does it mean for buyers? If I'm a buyer in this environment and I just entered the market knowing it's gone up by 30%, and now people are starting to say, well, hold on a second, maybe we need to wait and see what happens. What should I do as a buyer? Dan, what would you recommend?
Yeah, it's interesting. And again, it sort of feels like day one or week one of the shift. So it's a bit spotty right now, if I just want to extrapolate a little bit more on the previous comments. So it's not like it's turned on its head. It's not a 180. There's early signs of things changing. You can still go up and find a great property and go up against 20 other offers. Okay. But then you can also find a great property and go up against none. So it's not like it's all or nothing. It's a bit of a mishmash right now. So what do I advise buyers? Well, again, if you have been repeatedly outbid, or you simply don't like that environment, or you haven't been liking any homes that you've seen on the market, then it's definitely time to start paying attention. Because again, we're perfect examples of getting homes, great homes, recently under contract, under ask, with no or very low competing bids. And then again, now we're getting subjects. It's great. We can protect you even further, right? We're great for doing due diligence prior to offers, but again, there's a little bit more breathing room post. So that's something right now to pay attention to.
Yeah. But you're spot on with your spotty review of the market, because it's very contextual. It's based on, each individual circumstance, right? I mean, in some instances, in the same week, this was 2 weeks ago, in the same week, we were offering on a $2.5 million place in Point Grey that went for just over $3 million and had 13 offers. And then in the very next day, offering on a different property type and only having one competing bid and going, it sounds like a lot, but only $100,000 over the list. I mean, that is still significantly different than $400,000 over the list, in the same week. And I also think you're going to see this more in the high price properties. So I think as if you're a buyer and you're looking to buy right now, the higher price property has smaller buyer pools. So we're starting to see, bigger discrepancies at higher prices. As things go down in price and become more affordable, you're seeing still, higher levels of competition, and that's based on affordability too. I don't think the demand for the property has changed, but I think the sentiment around the way people are buying has changed. I don't think people are going to be so gung ho to just chuck money at a property and try and win now. I think they're going to be a little bit more calculated, knowing that the rest of their expenses have gone up, considerably.
Yeah,
So,
that's exactly the point. And the recent studies, recent poll just showed that something like 53% of Canadians are cutting back on discretionary spending compared to
wow,
even just a couple months ago.
wow,
And 41% are pulling back on major purchases. What's a major purchase? A
a
house.
house.
So again,
Yeah,
people, I think, especially with this war, I mean, there's literally now talks of potential nuclear threats and chemical warfare. I mean, these are things when humans naturally go into, let's say, a preservation type of mode.
yeah, risk
You're not thinking
mitigation.
about buying a vacation home in the middle of a war,
No,
generally speaking. Do you know
no,
what I mean? So,
yeah,
um, yeah, so people are feeling like they need to kind of protect and save their money and their income, and maybe not make huge expenditures right now. And also, okay, well, we've seen the first interest rate hike just happen too. So is that going to continue? Is that going to continue? Um, that's an unknown. And of course, those talks of 6, 7, 8 rate hikes, I think that war just all but eliminated that as an option. Still that 2, 3 that we predicted at the beginning of the year, still very much possible. Don't expect 6 or 8 hikes. That's my stance still.
yeah, and I tend to agree with that because, again, as we talked about, if you're a buyer right now and you're watching what's happening and you're realizing that, well, if buyers are changing their sentiment and how they're going to buy things, that's going to change the way sellers present things. So if that means a bit more of inventory that's going to come to the market as they try and, make those sales to capture that profit, then you're going to have an opportunity of potentially buying something without competing, and even in some instances under the list price. I mean, Dan, we've had a couple of those already, right?
Mm-hmm.
So,
Let's talk a little bit then about inventory, because it
mhm.
is on the rise, and that's fantastic. 11 days in here on March, we've seen already about another 600 total active listings on the market.
Mm.
Okay, so it's trending in the right direction. We're up about 1,900 total on the year. But keep in mind, this is off of record lows. We are in a record low March right now. Okay, 70, just under 7,400 active listings, up 1,900 on the year, but record low. Like, we're still below current inventories, below any other month dating back 5 years.
Yeah, I
So
think
it's still,
it's still really important for people to realize that we were driving at 200 miles an hour. Right? We
yeah.
weren't driving around, we weren't driving the speed limit, right? We were hair slick back as fast as we could go. And like we've said before, about a year ago, when it kind of cooled through the summer, we saw that foot come off the accelerator. And that's definitely taking place right now, right? And the question is does it persist? Does it maintain? And the environment a year ago looked way different than environment now. And so, yeah, I think the outcome will be a little bit more different. It might be a little bit more prolonged, especially with this conflict going on. And that puts people into more of a less risky position, right? So people are going to restrict the dollars they're spending, and they're going to start to save more, right?
Well, here's the thing. Remember when everybody was locked down and there was all that helicopter money?
Mm-hmm.
Mid 2021, the household savings rate hit 28%. We're now down to 6%.
Wow.
That's a big drop off.
Wow.
Now, again, this is pre-war data, right? So people were out spending again and going on vacations and whatnot.
Yep.
And keep in mind, it was about 3% pre-pandemic. So we're still above that. And maybe that'll increase again now too, because people are going to be afraid, as we know, they're pulling back on major expenses and discretionary spending.
Yep.
So, things were kind of opening up. People felt good about spending again, if you will.
Yeah.
That may change again, but that's a big sort of thing to note, is that I think all that pent up savings has largely been spent.
Yeah. And on top of that, too, I mean, you keep going down that path. And if buyers restrict from buying and more sellers hit the market, and then we've got interest rates that were supposed to go up, but if buyers don't spend, we don't stimulate, then interest rates might stop going up, right? Because we need to stimulate the economy still. We need to recover. We haven't recovered out of COVID yet, not entirely, right? So we have no. Today is like the first day we don't have to wear a mask. Yay! But still, it's a different environment, and so I think it's also important that we discuss maybe what sellers should do, because it's a very different environment than just putting your property on the market now and waiting for your 10 offers to show up. That's not going to happen. It might happen for the right property, but now it's going to come down to having a real listing strategy, having a realistic sale price, right? And that's quite a mental shift from the last 2 years.
Of course. Yeah. 2 years here, we're like, yeah, you're going to sell in 1 week and you're going to sell over ask. And it's all
Yeah.
about a guarantee. And that was the vast majority for most homes. And yeah, this is, yes, the beginning of the shift. And maybe we kind of put in a precursor to the rest of that talk with what is going to happen with prices. If things are slowing down, if there are less offers, if we're getting things under asking price, does that mean prices are dropping next month?
Big question. Big
I'm
question.
going with no, but I'm going with no because prices, the way they're tracked, are largely a lagging indicator. I don't think we're going to see prices drop for about 2 to 3 months, barring a secondary black swan event.
Yep.
But sure, they're gonna level off, and they're gonna level off quick. And again, this is coming off of an all-time record increase, so to see a leveling off is not only more than welcome, but I think a natural transition about what's going to happen here based on what's happening on the ground.
I also think we'll probably see the sales to active listing ratio change first, right? That's usually your largest indicator of behavior, and so right now it's been just bananas sellers market activity, right? So it'll be really interesting to watch where those numbers adjust to, because that'll be the best indicator, at least in the short run, of where we're going. Prices, like Dan said, will continue to adjust as a result of that, right? But I also don't think prices could fall too much. And the reason for that is because when you look at everything else in the economy, and the cost of lumber is staggeringly high again, the cost of fuel has gone through the roof. The cost of getting a container for shipments is, it was $2,000 pre-pandemic. It's now $24,000 to get a container on a ship, right? So the cost of supplying the market is also gone up. So, prices can adjust, but as long as those commodity prices remain high, then they're only gonna adjust by so much. It has to be the whole commodity price has to drop in order for them to continue to go down, so they can make them cheaper. We can't do that yet, right? So we're going to see a bit of a shift here, but again, I think largely in the short run, it's probably going to be sentiment and behavior based. Prices, we'll see where that goes. We need a bit more data first.
Yeah, it's likely gonna, I don't know, I think level out again for a while. It could easily go either way. And that's the interesting thing about this market, this landscape, more than others, because like Ryan just touched on, because the cost to build is now increasing again at a very, very quick rate, builders are going to pull back. Okay, less houses available, but we know immigration targets continue to increase.
Yeah,
okay,
that's
more and more people coming in, more and more people coming in. Borders are opening, masks are dropping, tourism increases. Okay, so those Airbnb units become interesting again, removing long-term rentals for locals. That to me, let's also talk employment today. We are at a lower unemployment rate today than we were pre-pandemic. People
Amazing.
are employed, people are making money. Those metrics will push prices up. But then we've got people, again, everything else is so expensive, people are pulling back on major purchases. That's going to pull prices down. So it's a bit of a tug of war right now that's in the middle, which is, again, sort of why I'm feeling a flat market for a little bit. Interest rates, again, harder to raise in the current environment, yet they need to fight inflation. Tug of war, again. So, this... there's never been certain times really in our world, but I think they're more uncertain than they've been in a couple decades. So it's all going to hash out in some way or another, but I'm predicting pretty flat prices for about the next 3 months here.
Yeah, I don't see how, when we talk about immigration. I mean, the targets for the next 3 years are enormous. 1.4 million people are going to be here in the next 3 years that aren't here now, all of which are going to have permanent resident status and they can buy real estate. We know the vast majority of those people are going to end up in Quebec, Ontario, and BC. And those real estate markets typically funnel into the major ones. So we know that more demand is coming. And I think this could be, a bit of a leap from where we are in terms of this conflict today. But if things continue to get worse, Canada begins to look more and more like a safe haven to the rest of the world. And are we going to see more, people of refugee status coming here? What is that going to do to our rental market? There's a lot of unknowns here. And I think it's changing pretty quick. So, I think if you're a buyer, really maybe taking a week to see how things are playing out, it's not maybe a bad thing to do. It is, continue to watch what's happening, but at the same time, and we've seen this market change. We've seen it be crazy hot. We've seen it be very cold. That's actually when Dan and I first started, was when it was crazy hot and then it cooled right off. But what I noticed in those time periods was that even the really nice real estate in Vancouver was still fought over, right? So if you're a buyer and you see a property and you recognize that you might be able to get said property without competing, and you're going to be there for the next 5, maybe 10 years, is still a property worth going for. Interest rates are still very low, generally speaking, right? The environment to own that piece of real estate still makes sense. But if you're going to be, holding a property for a year or two, I don't know. I don't know if that's really, it's pretty risky right now.
Yeah, definitely risky for your fix and flippers.
Yes.
They've had it very good for 2 years. Now is when you start to make sure, if you're considering a fix and flip, you have alternative exit strategies. Whether that's the ability to rent for 3-4 years and be okay with your bottom line, great, then consider it. But if you only have one exit and that's flipping for a profit, reconsider or evaluate very, very carefully and make sure you're going into the right neighborhood and most sought after asset class.
Yeah, make sure you do your homework, because not just anything will flip again, right? So yeah, I mean, ultimately, Dan and I have certainly recognized a significant change in the marketplace, and we wanted to be informing you guys of that as early as we can, because I think, again, as a buyer, it changes your attitude, and as a seller, it changes your expectations. Obviously, if you have more questions about how to navigate this, it is case by case. So reach out and we'll definitely check it out.
Really appreciate that. Well said, Ryan. Thank you, everyone, again, so much for watching and listening. Times are interesting. We're going to keep you updated. And as always, please reach out to us for your specific circumstances. We're happy to help. Thanks and have a great day.